Everybody, welcome back to the channel. So, this week is going to be a crazy week for the market. At least not at first, but it's going to get crazier as we get closer towards Wednesday. Because Wednesday, there's going to be the FOMC meeting where the Fed decide whether to increase or decrease or keep the rates exactly the same. We're gonna find it out on Wednesday. We're also going to be looking at some stocks to be keeping in your watch list. So let's dive into the charts right off the bat. We get the Nasdaq futures, and not much history because they keep changing this thing right there. It's very annoying. I don't like that. But every single time they change it, then I gotta change my ticker, and now it looks like this. Overall, the daily chart, I am still bearish on the overall market. Last week, the market did something quite nasty that I didn't like. On Sunday, we were looking great. Short sellers were looking like they were about to make a lot of money until Monday happened, right? So between Sunday night and Monday, the market kind of prevented short sellers from collecting all of this money, right? This was about, it opened up by 1.5% into Monday and then pushed up on Monday and then stayed up on Tuesday. And we never got a retest of that low, of that 24,200 at any point this week. Not on Tuesday, not on Wednesday, not on Thursday, and definitely not on Friday, right? This is terrible price action. Yes, the market was slowly falling, right? But the volatility is just missing and the volume just sucks. Right? Overall, am I still bearish on the market? The answer is yes. Not just for this reason, but for other reasons as well. All right. We look at the daily time frame. The bears are still in control. The floor on the Nasdaq is still at exactly 24,600. Right. So we're playing around at this level. And to be honest with y'all, I think the first half of the week we're not gonna do much. The market is going to allow the moving average to catch up probably on Tuesday. It might give us a bunch of dojis. Price action is going to be extremely annoying, and I'm telling you this in advance. That way, you don't try to do too much. That way, you learn to just chill and patiently watch and patiently wait for that volume increase. Because right now things are looking kind of terrible. Yes, we're going down. Yes, but it's just really, really, really slow. That's the frustrating thing. Okay, so Tuesday might look like this. Wednesday might start off looking like that, and then the Fed is gonna come up with a decision on what to do with the interest rates. Now, if we take a look at FedWatch, yeah. So this is the FedWatch tool, and according to this, the probability of the rates of staying exactly where they are versus cutting is exactly 99%. Like, they're not expecting a rate cut at all. They're expecting the rates to stay exactly the same. CPI came out at 2.4%. Inflation is low, yes, but the labor market and the unemployment rate came out a little bit higher than expected at 4.4%. And also the PCE ended up being high, which is another inflation tool that the Fed likes to use. And because of these reasons, right, then the probability that they're going to keep the rates exactly the same at 3.5% is almost 100%, right? So we'll see how the market reacts to that when they announce the news that they're not going to do anything. I think volume is going to pick up, and I think that floor is going to give out. Okay, the weekly also is looking bearish. Will we test the high of 24,200? It's a small possibility. It could happen. And if it does, I will be very short bias right there if it does. Okay. So now the first stock to keep on your watch list for this week. Honestly, this one is the best setup. There's just one good setup and then everything is just trash. The one good setup that I see on the market that could pay a lot if it decides to move is Apple. And I want to share Apple with you because of the because of the daily chart, there is a gap to fill on here. It started to fill on Friday when it broke below 251, but it didn't get quite that low. So tomorrow we're going to open up at exactly 251, maybe even a little bit lower at 250.50 cents. And then it's going to make its way back down and get to 257.5. Could it go lower? I personally think so. I think it can drop lower. There are more gaps below. Like there's another one right at 230. It is small, but it is present. All right. And the next one after that is even lower. But for the sake of this video and for the short term, right, I expect us to get below, to fill this gap right there tomorrow, do nothing on Tuesday, and then Wednesday we really break below the 200 moving average on the daily chart, and then we start making the way towards 240, right? So that's the second reason. Now the third reason is because of the 4-hour time frame. There is a descending triangle, not the cleanest that I've ever seen, but it is present and it is there, right? We have, I say it's not the cleanest because of this. That infuriates me, but it shouldn't stop me from being bearish on the stock, especially when that floor has given out. So could there be a chance that we retest this right here? Yes, it depends on, it really depends on the first 5 to 10 minutes of the NASDAQ and the SPY, and whether it wants to creep up a little bit before really falling later this week. All right, but the one setup that I am looking at is Apple. So watch this one for a drop. Again, I'm not sure how fast it's going to drop, and I do expect it to be very annoying, but I expect it to go lower. Now the next one that we gotta look at in today's video, we gotta look at Tesla. I mentioned Tesla last week, and I told y'all where the floor was at exactly 385-ish, somewhere around here. And ever since then, it's been doing a whole lot of nothing. It's only down by what, $5, $6 since last Friday, right? Only down by negative 1.4%. So we'll see what happens. Have your alert right here, right at 384, and wait for it to ring. Because the moment it rings, there could be a lot of money to be made on here to the downside. There is one gap to fill at 340, but it has to give us a reason to short. So regarding Tesla, I'm on the sidelines. I'm patiently just waiting for it to give me a reason to take a trade on it, and it looks like it's going to be to the short side. So pay attention to it. Pay attention to it this week. And it looks exactly like the NASDAQ with these long wicks at the top. A slow fade, a slow drop, followed by a rejection of the 9 SMA on a weekly. So the bears are in control of the stock. It's just only a matter of time before that floor gives out. Now the next one that we gotta look at are the banks. Now the banks are a little bit more stretched to the downside, and I told y'all last week that I was expecting it to go all the way down to 672. So it is slowly falling. It is slowly falling. I don't know what's wrong with Thinkorswim, but this is very annoying. Like, it makes it very difficult to read the chart, and I constantly have to correct this thing. So I just let go of Goldman Sachs. I was like, I'm not trading this thing because it's just really annoying. When I look at the 4-hour, the 1-hour, it's falling, yes, but it is hard to read. So tomorrow again, I think we might go back up above 800, play some games, and then FOMC would drag this thing down. Now the last stock that we gotta look at in today's video, which yeah, we gotta look at. Somebody asked me to take a look at Marvel in the comment section. Now with Marvel, this one is a complicated one. And I say this because MU has earnings on Wednesday. And then this one is stuck in between two gaps. The one below from the previous earnings at 79, and the one above between $99 and $94, right? So which one is going to get filled will really depend on which direction MU wants to go. And MU looks like it wants to squeeze. it definitely looks like it wants to squeeze from earnings and go all the way up to like 500. And if that happens, Marvel is going to follow that move, and we're going to see it at least touch 100 before we see it try to fall back down with the market. Right? That's what I'm seeing with this one. That got to get taken care of, and I think I'm leaning more towards the top gap getting taken care of first before the bottom one, just because of the strength that MU is showing. Let's take a look at MU. All right, so this is MU, and as you can see, it had a gap down. Like over the weekend, it was all the way down to 350, and it ended up opening at 360, and then climbing back up here, and literally gave no reason to go back in short. Every single day, it's just strength after strength. And the next level of resistance, short sellers are worried about MU breaking above 440, and we got that earnings report coming up, right? So the more it stays up here, the more likely we are to see positive reaction and for it to open at like 525 up here, and then a fade, right? More like a pop and fade. I will be on the sidelines. I'm not gambling on MU. I won't gamble on MU because the contracts are super inflated to begin with, right? So they're not even worth touching, and they have to make a really, really, really massive move for anybody to get paid. So the odds are, even if it goes up here, both sides are going to lose because the contracts are going to get cheaper. And the opportunity to look for would be intraday after it reports, not before. Okay, so it's my honest thoughts on all of these stocks, and that is the end of the video. Again, if you disagree with anything that I've mentioned in this video, I will see you in the comment section. All right, tell me why I'm wrong. I would love to hear your opinions. Again, I am not your financial advisor. Always do your own research and make your own decisions. Don't forget to follow social media at Paul Nguma and at Patternology Lab on Instagram and on X. And lastly, don't forget to like and follow for more.